Hi, good evening, guys. Ken at Tortoise Capital, the nightly strategy podcast for August 18th, 2020. Let's just jump right into it. Now, please. And Snagit responds with a quick crash. Stand by. Okay, let's try it again. Ken at Tortoise Capital with the nightly strategy podcast for August 18th, 2020. And let's get started. So yesterday, we had the market moved slightly higher, but had a very tight range doji after making a new 10-day and 30-day high. Today, there was a fractional gap up, an early morning sell-off to the edge of the dragon's top skin once more, and then had a very strong afternoon move and closed in the top 20% of the range after making another new 10-day and 30-day high. So this is consistent with that kind of lower volatility and afternoon move, if you will, the one that is probing to the downside, but not really finding any willing takers to short this market. And all of those little sell-offs being seen as intraday buying opportunities, and finishing with a strong upward move. So that's been the case the last 4 days in a row, slightly higher closes than opens on relatively low volatility. So the moving RL10 remains solidly in the summer. The baby dragon is pacing that price nicely, so that's still healthy. The RL10 is above the baby dragon. The RL90 is getting steeper to the upside and is now coming back out of the dragon. That's a positive. The dragon remains steeply up. The entire dragon is out of the river. That's unusual behavior. So it's hard for that to maintain that same upward pace because what ends up happening is that at some point, this price action here that is making the RL30 lag a little bit and the river lag a little bit will disappear, and then the river will get steeper northward. So this is really just an indication that this has really been an exceptional move. Anytime you see the dragon completely out of the river, that means the last 10 days have really been a nice move from 331 all the way up to 339. So that's a 3% move in 10 days. That's netting like 0.6 a day. If you think about it, if it could average 0.6% gains per day in a 250 days out of the year, we'd be looking at 150% compounded annual. So that tells you how good that 10-day period is really pretty good. The move to the upside, it only has 0.16% to go to break out of that high of the day, which is also the 10-day high and the 30-day high. And then it gets to the peak. Dragon all time is 339.57, and it's right there. And the Z2 line is at 341. And then off the chart, the Z3 line, if we saw that, would be up here at like 348. So this is really kind of an incredible last 10 days, and all signs point to yes. The move to the downside, the support levels would be top skin of the dragon at 336, the middle of the dragon or the dragon spine at 335.7, the lower skin of the dragon at 334.7, Z1 down here at 334 even. The PSAR today was 332.46, never in danger. Tomorrow that PSAR is going to be at 337.27, so it moves up, keeps moving up that stack. And this is starting to get to be a wider than normal support level here. Because if we look back like 12 or 13 days, price was trading right around, the candles were trading right around the PSAR itself. And at some point, the RL10 was getting close to the PSAR, and that's where it found support and then took off and made this pretty amazing move here. But now that RL10 up here at 338.5 is 2 full percentage points above the PSAR. So this is now accelerating faster than the limit to the growth rate of the PSAR. So that's really a positive sign. And you can see that the slope of the Bollinger Band mean envelope as this thing opens up, that's all straight up. The RL30 is straight up. The Dragon's straight up. The RL90 is getting stronger. So this is just a market that is just grinding and going. And the Bollinger Band mean is all the way down here at 326.84, which was also the previous RL10 peak. So what used to be the peak of price is now simply the Bollinger Band mean, and that just tells you how strong this move up was. So optimistic about the move to the upside. Let's take a look at the sectors and see what happened today. Okay, so the S&P netted 0.22% today. The diamonds lagged a little bit at minus 0.27, and the Russell lagged considerably at basically minus 1%. So fractional up for the broad market. The large caps gave back a fraction, but then the broad speculative U.S. index, the Russell 2000, was kind of a decisive downward move. So what that really means is if the broad market was generally weak, 2 out of 3 were weak, then the sectors and symbols that were strong today, which pulled the S&P up, will be important leaders. All right. So let's take a look at the sectors now in the green that worked. So the market was at 0.22. Technology doubled that at 0.38. Nice little cluster in here around 0.7, which was Treasuries, clean energy, and consumer discretionary. So Treasuries are starting to make that move. I think people saw the dip back to 160 as a buy strength on sale, and they're starting to lock in some of that defensive inventory. So the market is creeping north, but some of these defensive sectors are actually doing better. Right. So clean energy to me is a long-term smart play because you're keying in towards applied technology that will keep us energy independent, which protects us against both Chinese and Russian self-interest. It's a politically sound sell. It's the place where new jobs and new technology can go. And if we're going to rebuild America and make cities livable, then a significant investment in clean energy is sort of a no-brainer. To me, on a policy level, I think you could get elected if you said, let's convert half of the Department of Defense overseas aggression budget into domestic alternative energy production and use that as the next competitive advantage in the world. So instead of selling rifles to the world, we could be selling clean alternative energy solutions. It'd be better for the planet, better for the people. And so I think there may be some appeal in PBW as a very strong sector for that reason. So that's a long-term macroeconomic bet. These next two, the consumer discretionary is a response to sending free money to consumers to keep the economy stimulated, and then treasuries and silver are representing defensive plays. Brazil is a speculative value play at 2.8. Then in the battle of the triple techs, we have TECL, which is like 3 times XLK. That's the broad technology sector, was up 1.2, but the more focused triple Qs was up 3%. So that's starting to be the decisive play, and that's rewarding more mature tech leaders like Apple, Google, and Amazon. And when they do well, TQQQ does really well. So that's where that strength comes from. And to me, if you don't want to pick between Amazon, Google, or Apple, but you just want to buy the basket, then TQs is kind of the way to do that. If you want just broader exposure to tech, then you're in the TECL and XLK basket. Okay. So other things that did better than the S&P in terms of companies, there's IBM at 0.39, Coke at 0.44, Facebook and Microsoft around 0.45 and 0.6. There's some metals in play here. There's U.S. Steel at 0.76, Alcoa at 1.8. They were better than their peer Nucor, who's down here at flat. So this was really tech focused today. You have tech and consumer discretionary. What was worse than the S&P today? Well, the sectors, we had healthcare minus 0.03, emerging markets minus 0.11, wheat and precious at minus 0.15. You have a cluster here of Mexico, materials, and industrials at like minus 0.3 to minus 0.5. Financials, not strong at minus 0.65. You had energy and the oil and exploration at minus 1.2 and minus 2, respectively. Some of the companies that suffered today, less than the S&P, Cat and Cisco, both are still on my list for buying swing trade opportunities, starting with turbo positions. I still got my eye on Cisco. Intel, NVIDIA in the chip wars are basically flat with respect to each other. Cliff and Nucor at 0 and minus 0.6 lagged the other two metals that won today. It was Alcoa and U.S. Steel. So we're seeing some differentiation even in the companies within the sectors. And then big losers today, Win minus 2, Virgin Galactic minus 2.4. I think the bloom was off that one. Devon Energy minus 3%, so that's automatically back on my radar. Nikola and Simon Property Group both down over 4%. So seeing some differentiation in the companies. Now, of note here on Kodak, there's, even though this minus or this plus 5% today to get it back above 8, that's really not tradable intraday anymore in the smooth manner that we like. So we like things that are very liquid and have very small spreads and are like in continuous trade all day. But Kodak is no longer that kind of a target. So it may be a swing trade possibility, but when you look at it on the intraday, there's just too many time periods in which it's not trading at all. If we had looked on this earlier in the day, there were long periods in here where there was like hardly any volume being traded at all in here. So the pattern looks reasonable here, but it's starting to be problematic in terms of it's lacking the volume anymore. I think so many people got crushed that it's no longer the darling. Now, on the positive tip, what that means is that on a swing trade, it may actually be interesting once more, because if you look at say the hourly charts, there was some considerable buying interest today. And so for the first time, really in almost 3 weeks, there was actually some buying interest. And so this first hour, as it climbed out of the hole, there was actually some folks trying to juice it up. This looks like speculative pump and dump day trading in here, and so I don't think it's sustainable. I think there's just better ways to play swing trades. I'm not going to say try to put a breakout box. A speculator would try to put a breakout box above the VWAP, something like this, and say tomorrow, like if it breaks above, call that, call it above $9 with a $1 stop, then just buy it and then hope to luck into some kind of spike like that. That's such a pure speculation that that's buying lottery tickets instead of managing a professional position. So I'm getting ready to take, my eyes away from Kodak. It's really not much interesting anymore. Whereas Amazon, on the other hand, actually gives us, like on the hourly, you can see that there was plenty of buying interest. And on the daily, this is going to look pretty good. Yeah, this will have broken completely out of this about 20-day range. And so now we can see the low, a higher low, another higher low, and now this fall has turned to summer, and anything above 3,200, and that was nothing but upward moment. When it breaks above the RL10, breaks above the RL10, and then off it goes with no resistance overhead. It's long and strong, so you can play Amazon directly or play TQQQ if you want to do that. Google, the other tech leader that was very strong today, has basically the same pattern. Not quite as strong as Amazon, because it hasn't completely cleared the previous price action, which you can see if we just drew this across. It still has one more little leg to go. But if you measure that against the upper skin of the dragon, it clearly broke out today. And if you measure it from the peak of the RL10, it clearly broke out today. So the RL10 and the PSAR flip happens right here. So that's a clear breakout. You don't have to wait for it to get above these price levels. It made the statistically significant breakout today. So now, if we compare those two and then say, well, what about the sector that they are dominating? See, the sector is even better than either one of those. So you're going to get the strength of Amazon and Google, but the broader support from TQQQ, and that thing is a clear winner. I added to the swing position that I had in this one today. This pullback in the RL10 that didn't even get through the dragon and then resumed was my signal to get long on this yesterday in here. And then I added to the position today. Then when it broke above today's high, that was the signal to keep going. So I like that one on the long side as a swing to hold, and so I don't mind a stop like at the PSAR I think you could bring that all the way up to the spine of the dragon if you wanted. And, I'll be watching this with a turbo position tomorrow, and I probably won't let the second position go negative. So my intraday stop is going to look something like, over here. At call it 133 even. As long as it's above 133, then the two swing trades are in the money and continuing to do well. And so then if it breaks above today's high, which is really 136.36, then off we go. So I'll be putting a small hybrid frog box on that thing, and I will be ready to trade it long instantly tomorrow, because that's the clear winner in the tech space. Apple was the third member of the triumvirate of joy today, and you can see Apple is just dominating as well, and that looks pretty good. Okay, Microsoft is a contributor. Microsoft has more room to go. It has broken out of this little bracket we built around the Bollinger Band mean, and so that thing has moved decidedly to the upside. That feels pretty good. It's a tactical trade in Microsoft until it gets above this RL10. So I'm going to color code that bluish, saying that I kind of like it, but I'm not really persuaded until it breaks above that PSAR and that the hump of the RL10. Then that's really free and clear. That actually that's an important double top already, because the last time that it got to that level, you can see it sold off. And the time before that, it got to this price level around 216, and it sold off sharply. So now this is a nice tactical trade up to 216, but it really has to get beyond that blue box to really be free and clear. So if it gets above into this green box, then we're really happy. So 216 looks like the important. Just spilled coffee all over my lap. I was so excited about that one. Nice. Dummy. Okay. So that's my quick look at tech. So it's, if anything's going to pull this market higher, it's that tech sector with some backup support from XLY. So if that's what tech looks like, all I want to do on XLY, because I don't see explosive growth in the members of XLY. That's really more just a broad sector strength. And when we look at XLY, why would you want to differentiate down into individual companies when you have this kind of a move? I feel dumb for not highlighting this sooner. We've been talking about it, but I haven't been doing the detailed analytics on it. So when it breaks out of this sideways box, this is why that looking for the measurements of the that peak RL10, it doesn't become decisive until the RL10 breaks out of there, and then that's really what gave it the heft. The other thing I just want to draw your attention to is the, I'm going to highlight it here with the yellow dot, is the RL30 I talked about earlier this week as the health of the trend. So everything was fine to here, and then this 10 or 15 day consolidation zone and sell-off made the RL10 weak. The RL30 was a lot smoother. And then when you get the RL10 crosses again back to the upside, notice that the RL30 never crossed the Bollinger Band mean. So here was a moment at previous max excursion. You can see between the two yellow dots that the RL10, or I'm sorry, the RL30 versus the Bollinger Band mean. So they're both measuring, or they're both looking at the last 30 days, the last 30 bars, and the RL30 is faster to adapt. So that's how much like accelerate. Think of that as acceleration, or this upward strength of the trend. But then when you look just about 10 days later, it has pulled back to this narrow gap here. So it is kind of squeezed back together, if you think of it that way. And then as this now starts getting stronger again, the price starts moving back up. Now by this time you feel the RL30 is starting to pull away from the Bollinger Band mean again. And now you can just feel the strength of that trend getting better and better as the RL30 pulls away from the river. Now, the key moment in all of this happens right here. This is where underneath this yellow dot, this is where the RL30 leaves the river. So now it's more than that Z1. Now you'll notice that price, the RL10, and the RL30 have all left the river. So this is the beginning. This move right here is the beginning of trending behavior. So you can actually buy this breakout here anywhere in this bar, buy that long, and then you can use the Bollinger Band mean or the PSAR dot, and then you're in this trade all the way up. So the slope of that RL30 acts like the health of the trend. Anytime it's out of the river and moving up, that's going to be a really good thing. Right here, you can now see the RL10 after a period of sideways consolidation doesn't fail back to the Bollinger Band mean. Instead, it makes a new breakout. So right in here, either at the green dot or this yellow dot, is a place that you can add a position or even begin a position, because it has cleared the previous RL10 and the previous price, and it's breaking out after a 15-day period when it failed to fail. That's almost an SQC breakout in that sense. And now XLY is just continuing to march. Well, there's no sign of that thing slowing down. You have a nice wide gap down to the Bollinger Band mean, so it would be reasonable to put a stop. If I was a sniper stop, I think I'd have it here at like a 2-bar low. I wouldn't mind that. I could also justify a sniper low like at the Z1 or at the PSAR. So any one of those would be okay. And if we said this one, this red dot here might be the manager. So you could have, if you have this position here, or you had the position from back here, half the position following the Bollinger Band mean, and then half the position ready to take a sniper exit, and then you decide what your sniper wants. For me, the fact that we are now outside of the Z1, outside of the Z2, and we've been up for almost 30 days, makes me want to have like a 2-bar low as my sniper. And then I would probably just use a command override on this one and just automatically move my my manager's exit up to the skin of the dragon or the Z1. And I would use those two. I would use those two as my stops right now for any swing trade for XLY. So those were the two strong sectors today, and those are going to be the two that power it forward. I want to take a look at Treasuries because that defensive sector's making a recovery run now. I say I want to look at Treasuries TC 2000. Work with us. Sorry. Not connected. Let's try it again. Nope. All right. Bite me. All right, we're gonna move to the daily report then. Sorry. I leave it to you to look at Treasuries. So in the daily report, we've seen the market health check. Everything's looking solid and bullish normal. Everything's strongly overbought still. ADX still at 24.8, very near moving into strong upward trend, right on the cusp of that. Risk Z is starting to creep back up, and that's actually a favorable sign. It failed to fail here. We haven't seen the volatility spike down, so this ain't bad. Only ILF is below its 200-day moving average on the overreaction and channeling signals. The non-techs are still the 10-day min pains. Cisco, Boeing, ExxonMobil still looking strong opportunistically as max pains. Lots of dojis today. Cisco at 10.5 to 1 on the auto framer. Goldman Sachs looks interesting here at 5.2 to 1. Big winners: McDonald's, Apple, Nike, Johnson & Johnson, Verizon, Procter. I think you could make an argument for Boeing. It's a doji. It's 3.9 to 1. There was a handful of RSI2s under 2, so Cisco still is very attractive. Travelers is a possibility here. Goldman Sachs looks even better. Goldman looks nice because it's got a 4 on the RSI2, and it's 5.2 to 1 on the auto framer, so that looks good. Caterpillar also looks good to me. 2.8 to 1. It was a doji and is a 9 on the RSI2. So all of those are legitimate swing trading one day at a time. In the ETFs, lots of dojis today. Treasuries continuing to fire on the channeling, still at 8.3 to 1 on the test of the 10-day high. So I think we got it like that. Finance is the other auto framer that Treasuries, Brazil, and finance all testing out well in the auto framer. Finance is nice because it has a low score on the RSI2, the only one that fires in that way. Let's see. Yeah, it feels like silver is back in play here. With a strong play today. Silver, Verizon, Merck, Apple. Cisco and Treasury still lagging. Pfizer, Cat, and Cliff in the pinch zone here. I'm going to add Nucor to that because it lagged today and is still pinching nicely and is right at its Bollinger Band mean. Lots of goodies in here in the for the auto framer. There's Cisco and Treasuries at 8 and 10.5 to 1 respectively. Home Depot still attractive in the regression line fractal. Apple just knocking it out of the park as well. The deep discount value, Intel, 1 ATR below its long-term fair value. I'm sorry, 10 ATRs below its long-term fair value, and the ATR is $1. So that's like buying at 49 with a stop at 48 with a trailing stop is legit. Relatively small range today, not as small as Monday, but still pretty small. So there's quite a few that test out well on the 1 day coiled spring here, the daily squeeze. Looking at Disney is interesting. IBM, SPY, and Boeing, Microsoft, Morgan Stanley, and Cat, all things that look good. The haves and have-nots, strong summer for lots of symbols as the market resumes its northward march. You can just see how out of the ordinary Cisco really is right now. And it is just failing to fail. So I like 48 as the support level on it. All right, this is TC2000 is back. And this is that nice upward move in PBW, still long and strong. If this is leg 1, this is leg 2 that we're in. And you can see before we were able to quickly get 2 positions in. It made this move up and then this pullback. Now, this is where you get into that debate, sniper versus manager. The sniper probably would have taken the exit here and then had to re-enter. But the manager, who's just been using the Bollinger Band mean the whole way up, is still happy to be in and says, what's the big hurry? You know, what's all the commotion about? My personal preference is to get those 2 positions in quick. I don't mind taking the exit here, like at the PSAR, when it hits the PSAR. I don't mind taking that exit as long as I'm getting back into it here. It would be reasonable to get that second position in right about there because it has taken out the previous RL10. You see, when it breaches that RL10 here, then this becomes a reasonable, either here or here, becomes that second position. So my preference is to take the exit, is to take that sniper exit here with half, and then keep the manager's exit cruising along, so I don't lose my mind. But if you take this sniper exit here, you have to be ready to re-enter here and then get your second position back on. Cisco is just it's just not getting it done now that I'm looking at it some more. The I don't mind being long here at like 42. If I'm long in here from 42, my stop is still going to be down here at 41 because that's one ATR. I'd be willing to give it one ATR from here. This yellow line is where I would get short not later than. And then if 41 fails, the yellow dot, then the collapse will be pretty miserable. In fact, I would almost be ready to trade that one to the short side, like at 41, looks like 41.50, and then add a swing position short here. That feels pretty good in Cisco. I want it to do well. I want the swing trade to work, but at some point, you got to do what you're told. So I think that's going to be my trade tomorrow. Like that. I'll play the breakout in either direction. All right, back to, also I wanted to look at Treasuries while we're here. Yeah, Treasuries feels like it's made a nice reversal here. That feels pretty good. That's like a 1, 2, 3 entry today. But this is pretty good. And if it gets back into the river at Z-1, I think if you haven't bought it yet, I think you could buy it here. And then use the entire Z1 to Z2 box as your initial risk. And then looking to the upside, you're at least looking for return to the Bollinger Band mean. Top of the dragon, something like that. That would be a reasonable entry tomorrow. Yeah, that looks good. Caterpillar, this was like it should have been like a 5-day down firing. And so we identified this green box as a potential if it had broken out to buy it. But now that it's failing down through there, probably should have been short it today. But I'll be ready to trade that one tomorrow. And I'm going to trade it like this. So if it breaks down below today's low, I'm short. But if it breaks above today's high, then I'll be long at 140. So long at 140, short at 138 with a $2 trailing stop. That's what I'm going to look at for Caterpillar, just on a percentage basis. Right? Okay. Let's see. The NDX look is, let's see, McDonald's and Procter very strong. Verizon pretty good. Microsoft pretty good. This entire energy and finance complex, not good. There's Goldman getting smashed. I should have that on my radar. Just how bad is Goldman? Yeah, pretty bad. It's broken through the dragon, getting ready to fall out of the river. So I think you could get short that out of that box tomorrow. On the other hand, if it found support here, I'd be willing to to play for the same trade that you see right here. Like if it finds there's a triple 3 days in a row, it didn't fail further, and instead gave you this nice move back up to Z2. So that's a trade from Z -1 to Z +2. Yeah, there we go. Something like that. So the argument here would be, if history repeats itself, that we might see something, some gain box like that. So that yellow box now reflects like a 5DD trade frame, because if it holds here at Z1, that's better than it held before. You know, if we look at this, so if this is where the RL10 bottomed out before and held support and then gave this move, and now it sells off into 5DD, but now finds support at Z1 here. This is at 201, whereas this was down at about 198. So it's made almost it nets 1.5%. But again, if this holds and this takes off, then we're really playing from about 202 to 216. And that's a nice play. So I'm ready to trade the yellow box in gold. That's what this is telling me. The fact that it's the only one that had the 10-day breakdown tells me it's in a critical state. Then when you add in there just how bad finance has been, underperforming on the 10-day and the 3-day index, that could be a pretty interesting play tomorrow. Okay. Otherwise, it's tech and healthcare, or I'm sorry, consumer discretionary the whole way. And you got to like this on the S&P. That's just all good all the time. Unbelievable. And then tech starting to regain its ascendancy, led by the big caps. And the only naysayers, gold and silver, are saying, yeah, we hear you, but Treasuries, gold and silver, that's guys making their bets that tech run is almost done. So we'll see who's going to win that. Okay. All right, that gets us right to almost an hour, and let's finish this up quick. Just a strong, steady upward gain. The slope of the RL30, the health, is still in the comfortable. It's above the zero line, but it's not exaggeratedly strong yet. So that's actually a good news story. We're pushing the boundaries of the previous stretch above the 200-day moving average. That's as good as it was until the big sell-off. So just notice how quickly the collapse occurs versus how long it takes to make the rebound. You know, that's like 1, 2, 3, 4. It sells off 4 times faster than it rises, and that's why the collapsing dragon is such a powerful ally. Volatility remains remarkably low. And we're continuing to ride the edge of the river the whole way up, and we haven't even had a test of the bottom of the river in quite a while. 30 days. So this is all good all the time. That's everything I got for you guys. We'll get this produced and posted on the website tonight. Plenty of ideas for tomorrow. Let's keep our wrists measured and our powder dry.